The solo 401k loan. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And on today's video, I'm going to teach you everything you need to know about the solo 401k loan. So thanks to 4975 D1, you can borrow money from your 401k without triggering a prohibited transaction under 4975C. And Section 72 of the tax code provides you more details and guidance on how the solo or 401k loan rule works. But you don't need to read the code. You're watching the video. As a tax attorney, someone that's written 8 books on the retirement, self-directed retirement system, 2 books specifically on the solo K, I'm going to tell you what you need to know. So not all plan documents will let you do a solo K loan. So you got to ask. If you're getting a free document at a bank, you're probably not going to get the loan feature. If you use a company like IRA Financial that doesn't sell products, that's basically a document provider company, you're going to get all the bells and whistles in your plan documents included, plus this loan feature. Now, the way the loan feature is super simple. You can borrow $50,000 or 50% of your account value, whatever's less, and you can use those funds tax-free, penalty-free. Okay? You can pull them out. You have 5 years to pay it back. Generally, you can pay it back, bi-weekly, monthly, but at least quarterly, so at least 4 times a year. The current lowest interest rate you can use is prime, as per the Wall Street Journal, which as of April 2024 is 8.5%. Okay, so that is interest that you personally are going to pay back your loan. So you're not paying back a credit card company or a bank, you're actually paying yourself back. So in other words, if you have 100K in your 401k, you can borrow up to 50K. If you have 40K in your 401k, you can borrow up to 20K. And again, you have 5 years to pay it back, at least quarterly, with an 8.5% rate of return. Okay, so obviously you need to make sure you can pay back the loan. The loan can be used for any purpose. You can use it to go on vacation, buy me a present, buy yourself a car, pay down debt, credit card bills, pay your mortgage, help your kids buy a house, whatever it is. There's no, you can dig a hole and put the money in the ground. There's no restrictions on what you can do with the money other than you have to pay it back. Now, our plan documents will allow you to do multiple loans. You just can't go above the 50K or 50% of your account value, whatever's less. The good news is once you pay off the loan, you can start taking back another loan, or at least pro rata percentage. So the advantages is as follows. You get tax-free, penalty-free use of the money. You can use it for any purpose, and you're guaranteeing an 8.5% rate of return. The downside, you got to pay back the loan. It's not just a gift. And you got to make sure you pay it, because if you don't and you can't correct it timely, you'll be subject to tax and a 10% penalty if you're under 59.5 for the funds you have not been able to pay back. So it's a great option. Probably back in like 2009, 2010, I used to have people setting up solo Ks really just for the loan option. Less so now. I think there's definitely more money in the economy, but things do change. And if there are tough times or you go through a rough patch, there's nothing wrong with taking a loan. It's in the code, it's allowed. Things happen. I've done it in my past. And it's a tax-free, penalty-free use of the money. It's a better way to get access to your retirement money than just taking a taxable distribution on your IRA and then leaking that money out of the retirement account and it will never come back. At least the loan, the money is going back plus an 8.5% rate of return. So I'm definitely pro-loan. The interesting thing is they haven't raised that $50,000 threshold in 30 years. So the government is okay with it. They just kind of want to limit the size of the ability to take out a loan. I think that number should go up a little bit with inflation, but who am I? I'm not running government or the Ways and Means Committee, so I don't really have that much power. But all in all, it's an option. Don't be shy if you need it. If you're self-employed, you have a business, you can set up a solo K. You can use that as a retirement vehicle to put away up to 69K. You can do it to invest in alternative assets, and you can also use it as a loan feature to borrow $50,000 or 50% of your account value, whatever's less, and use it for any purpose. So there you go. That is everything. Yeah, everything you need to know about the solo 401k loan. I hope you guys, here's a book I wrote on it. So I'm not fooling you. I actually know this stuff pretty well. Thanks again for watching. I hope you guys enjoyed the video. Check out all the other videos I've done on solo 401ks and self-directed IRAs. Forget I drop 3 podcasts a week, and also I still write a bunch of blogs a week the IRA Financial Group website. So definitely want to check those out. And if you're looking to set up a solo K, you can go on our website and you have options. You can set up a call to talk to someone to help you through it. We now have a quick account setup option where you can get started in like 3 minutes, or you can download our app and go through the whole process and get your plan customized. So thank you again for watching. I hope you guys enjoyed the video, and I hope to see everyone again on my next video. Thanks.